Good morning, everybody. Go ahead and get the Zoom started. All right. Morning, everybody. So we are there, all-time highs. We are back to the top. This is a rejection area. This is a critical moment in time. Uh, as you learn how to perform technical analysis and you come back into an area like this, especially what we generally refer to as support and resistance, you got to kind of try to understand, why is it a resistance area? What makes it that? And it's the amount of volume sitting at that level. Volume is the wrong word. It's the amount of orders sitting at that level. Now, this is Bookmap from the Thinkorswim. It's not a full Bookmap. I just used the free version. I don't need to buy a Bookmap. I own Jigsaw. But Bookmap on Thinkorswim will show you this liquidity. It'll show you those resting orders on the dome plotted as a bright bar on the screen. You can see where that liquidity is at. You can see how it was a resistance area here, but it didn't really resist us, right? We went through it. We absorbed those orders. A buyer reaches up to find someone willing to sell. So when a buyer is trying to accumulate contracts, you got to try to think of it from the institution's point of view, right? They don't trade like us. They're not trying to get a fill to get a couple of points. They're trying to accumulate contracts. They want to, they have this set number in mind, right? Joe gets the call from the boss, and the boss says, okay, Joe, I need 10,000 contracts today. That's your job. Get it done. And he goes in and tries to get that done. When he finds liquidity, when he finds a seller willing to unload a large amount of contracts, his job is done. He doesn't need to do anything else. And there was a large pool of contracts there, right? They were either moved or absorbed when we went into that area. Same thing here. Now, notice we got there and we didn't get them all. We absorbed some of it, right? The bar got a little darker there because some of those orders were absorbed as we came into that level, but there wasn't enough buyers to gather all of these contracts. There's 274 contracts there. There wasn't enough buyers willing to buy there. Maybe it's too high. Maybe they don't want to pay that much. Who knows? Whatever. The point is, it is a resistance area, not because we draw some line at a previous pivot point and say, oh, well, when it gets to that line, it's going to bounce. Try to think about the why behind it. Why would it bounce? Will it bounce? Will we go right through that line? And will there be enough buyers reaching higher on the dome to get us to that point, right? Because if they wanted to buy 50 contracts right here, they would have to reach up to find a buyer to get those 50 to find a seller to be able to accumulate those contracts. We're coming into an all-time high, coming into a place where we haven't been in a little while, right? We've been off of that path for a little bit. And in fact, that was last contract, not this contract. Now, a lot of institutions, they roll their contracts. So there could be participants in the market right now that got contracts back here and they held through all of this. Of course, institutions can do that, right? I wouldn't do that. No way I would do that. But there's going to be people who are going to want to get back out, institutions that are going to want to get back out. There is going to be a lot of liquidity at this level. And it's almost a guarantee that when we get to that thing, we're going to reject off of it at least once, right? Because of the amount of liquidity sitting there. Draw that line, put it on your chart, recognize where it is. Because when we hit that, which is where we were trying to go yesterday when it just stalled out and couldn't make it, when we hit that, there's going to be a reaction in the market. I notice a lot of people are using pivot points from this idea that that pivot owes them something. It owes them a bounce, or price is supposed to stop there, or it's a support or resistance. It's not what's promised. It's not even what we use it for, right? This is a recognized area where there could be a reaction in the market. And what's that reaction? Well, it can only be one of three things, right? It gets there and rejects, it gets there and stops and consolidates at that level, or it gets there and it just blows right through the entire thing. What are you going to try to do when it gets there? How are you going to trade it? Now that question doesn't just fit all-time highs. It fits every single pivot point that we trade. Yesterday's high, yesterday's low, yesterday's close. Today's open, Globex high, Globex low. Today's RTH. When price gets to a pivot point, what do you think it's going to do? How are you going to trade it? When are you convinced that it is doing what you thought it was going to do so that you can get in and take a trade? Or are you just going to assume that you're right and put the order on the dome and hope it all works out? Something to think about. A pivot point trading strategy is a whole lot of contemplation about how you want to handle the situation. Then doing the thing, doing it, taking pictures of it, reviewing it afterwards. If we get through this all-time high without a major rejection, there's like what I call a soft rejection and a hard rejection. A hard rejection looks a lot like this, where we get to an area and it gets the smackdown, right? Just a hard, immediate rejection. It is very clear. It's very obvious, right? Stevie Wonder could see that thing. That's a hard rejection. Now, a soft rejection is exactly what it sounds like. We get to an area and we ease back away from that area before attempting it again. Another soft rejection, we ease back away from that area. So should we get a soft rejection through here and we actually manage to make it through the all-time highs, then we'll focus on a 0.5% move to the upside and then a 1% move to the upside. It is possible to make a 1.5%, maybe even a 2%. It is possible, but we've already given away 12 hours of the trading day. Kind of hard to imagine that we could hit a 1.5 at this point in the morning. If we had started this journey a lot earlier, a lot sooner last night, then yeah, I think we could have hit that 1.5. So today's target, if we get above that all-time high, it's going to be the 1 point target, 1%. Now, I kind of got this nagging suspicion that we're going to tag it and we're going to start turning things around. All right, so what would that look like? Well, we would work through our pivot points, coming back through the high of yesterday, the close. Then we will come into, well, that was a mess. We'll come into the low of this pivot down here. The expected move, 45.29. The floor pivot, dealing with our own Globex low, and then a 0.5% and the previous low of yesterday. That would get us near that 1%. And the 1% to the downside, you know, they talk about the elevators and the stairs. If we start to make that kind of a journey, I don't think 1% is going to be the target. I'd really be going for the previous week close around 1.5%, or maybe, you know, a little bit more than 1.5. If we start going to the downside, I think it's going to look really nasty really fast. Now, having said that, I don't have a bias that we're going to go up or down. I honestly don't know. And I'm not the only one. There's a lot of people who are looking at this saying it's a critical moment in time. There's going to be, you know, some fireworks today, but nobody's got any idea of what the hell is going to happen today. But something's going to happen today. Let's go over to the calendar and look at what's on the books. (8:30), 9:45, 11 and 1. Now I got to admit the 1 o'clock rig count doesn't really mean a whole lot of nothing. I worked on the drilling rigs for 20 years, and it does not matter a lick to the market if there's 20 rigs drilling or 21 rigs drilling, right? So we're going to just discount the 1 o'clock. But 8:30, 9:45, and 11. Now, it's kind of funny that Powell's going to be speaking today after he just got caught with the whole fiasco of you know, reprimanding his colleagues for trading during Corona, and finds out that he was trading during Corona too, and buying a boatload of BlackRock before they started doing business with BlackRock. Yeah, I mean, like they said, there's no law against it. It's just improper. You know, as a person who worked to get my psychology degree, visuals matter. In psychology, you can't impugn your integrity. You're done if you do such a thing. Well, I think he impugned his integrity a little bit. So we really got to think, going forward, we're going to be getting a new Federal Reserve chairman. That's almost a guarantee now. What's that going to look like, and how's that going to affect the market? Now, it's another conversation, for a different day, but something to kind of just put in the back of your mind that's going to need to be resolved later on. The retail sales, look, this is right after the bonds open, right? The bonds open at 8:20. I shut down at 8 o'clock. I don't trade from 8 to 9:30. Actually, I don't trade from 8 to 10, but definitely not between 8 and 9:30 unless I'm specifically trading one of these economic events. And the reason is because when these economic events come out, if it's a wild miss, they've got an expectation. They've all thrown their what we think numbers into the ring. And if all of those analyst estimates are wildly missed, we can see the rocket mark in directions that just are random and unaccountable. Why would I want to be in a trade during that situation, right? When everything could just go straight to hell in the blink of an eye. So I don't trade in that time period. The dollar opens at 8, the bonds open at 8:20, retail sales at 8:30. There's a whole lot of things that can make the market move, and you wouldn't see it coming, right? It's not going to show up from any kind of technical analysis. There's no way to anticipate which direction it's going to go. If you can't see where we're going, why would you trade that? So keep them on your mind today. 9:45. Now that one's kind of sneaky because the market opens at 9:30, and we usually spend that first 10 or 15 minutes watching price discovery, getting a feel for where we're going on the day. Everything could change at 9:46 today. And then we don't know what, cheater boy here is going to do. So watch the lunch today. Nasdaq. Excuse me. For the Nasdaq, hard rejection yesterday. This is reminiscent of a gap close play, which is funny because there was no gap to close. But it's what it felt like. It's what it felt like. And at first, the target was back to the low. It was back to where it broke out. Because if you were watching market breadth during that move yesterday, there was no market breadth. This was done strictly in the futures. And the algos branched out and started trading a bunch of the different baskets of these futures. But it wasn't companies driving, right? It wasn't the other way around. So this wasn't market breadth. When it started to dump, the idea was, oh, well, it's just going to come back down and into where it left the range, into that wedge. And it went even beyond that, right? But it did catch itself. Now we're getting that mean reversion is coming back up. There's a little bit of, not fear, but expectation that when we come back up to where we left off, that we're just, quote, closing a gap. And I know you don't see a gap, right? I get it that you're not seeing a gap, but it's what it's called, closing a gap. There is a liquidity vacuum here, and that vacuum needs to be resolved. When we get back up here, it's very, very likely we're going to reject again, that the move is going to begin going down, not for any other reason that's what it was trying to do to begin with, but it did it too hard, too fast, and it's going to basically pull back and try again, doing it in a more controlled manner. So I'm looking for at least a soft rejection here, that we're going to get there, pull back, struggle through. It's right at the quarter, by the way. I'd expect, maybe a 25-point pullback and then a run at the game. That will get us to the previous day's high through that. We got our 1%. If the S&P does get through the top of that without that hard rejection and starts running for the 1%, I would be expecting the Nasdaq to go for the 1.5. That's if they stay correlated, right? If we get a bifurcated market like we've been getting, the Russell going down, the Nasdaq going up, and vice versa, if it's staying bifurcated, I really don't think we're going to hit that 1.5. We need everybody to be in the game, kind of all pulling in the same direction, right? So 1 to 1.5 to the upside. It's more of the downside I've kind of got my eye on today. Expected move. We are outside the boundaries of the top of the expected move. We want to see that resolved. Come back down, back inside the box. 0.5% to the downside. We got the floor pivot. We'll work our way through the floor pivot through the Globex low, and a 1% would get us back to the low of yesterday. The final low, the Globex low of yesterday, would still have us in this range, and it would not be considered bearish, right? If we are in the same spot that we were on Tuesday, that we really just didn't go anywhere, you can't really feel that it's bearish, right? We didn't do anything. It would not surprise me if we end up with a day like that. I don't think that that's the way it's going to work out. Be prepared for, another sideways day. We absolutely could get one. I think it's going to resolve itself, though, and we want to be prepared for what that's going to look like. Having a really good idea of what do we want to do with it. This is the weekly expected move, by the way, from the low to the high. That was what it was supposed to do for the entire week. We've done it. We had the entire week done by Tuesday, and now we've done nothing for 3 days. Heat map. S&P 500 filtered to 100 names. Change it to pre-market. I did adjust this just a little bit. Thought I had adjusted that. Let's do it that way. Aha. Got a little bit of color in it this morning. You see that Google and Facebook are down hard here in the pre-market. This is going to really weigh the market down. These two very large names, right? These are both names that are in the FANG names. Their market cap is in the trillions. They're monsters, right? Monsters of tech, monsters and FANG names. But you can see that finance is looking really good this morning. Sure, there are a few weak names in there. SCHW, that's Schwab, it's a trading brokerage. USB and MMC. But look at how many other names are in there that are doing good, right? And especially like American Express, Visa. So credit cards. When we talk finance, we always want to try to break it down into, well, what kind of finance? Fintech, lending institutions, credit cards, insurance, because oddly enough, insurance gets thrown into finance a lot. Apple looks good this morning, oddly enough. I was looking at the sentiment indicator on Thinkorswim, and Apple is at its sentiment highs, which is a little odd. If you don't know what I'm talking about, Thinkorswim has a sentiment indicator, and it's monitoring social media posts and what those posts are they, are they positive? Are they negative? Are they just posts? They literally monitor neutral posts. And if you look, we're kind of right up at that high of sentiment in Apple. And that's basically saying a lot of people are talking about it. Well, why are a lot of people talking about it? Because we're right at this critical level, the 150. That would be why. It's okay. S&P 100, we're looking at change in the pre-market. You can see that We've got just a little bit of neutral names, and maybe a quarter of the names are red, but not that red, right? The 3%, 5%, 10%, a tenth, right? Tenth of a percent. Not a whole lot of nothing there. You start getting into the quarters and the halves and more than 1%, then it really starts to impact, right? Intel, 10%. Now, I didn't misstate that one, right? Down here, I was talking tenths. Intel, 10% move to the downside. Oh, yeah. Take that ride, huh? I did not catch that ride, by the way. So if you shorted Nasdaq yesterday and you're still in it, goody for you. You're a pimp. Nasdaq 100, no filter needed. We're in the pre-market. And just kind of bump this over to the quarter, right? Kind of get that color up in there this morning. A lot of red. We've got the Facebook, Netflix, Google. Microsoft's basically flat. Apple isn't doing too hot, but NVIDIA looks really good this morning. Tesla, Comcast. We do got some names, right? We do got some names that are moving around. They're going to help, but not enough. They're not going to help enough. I've seen the market wobble because of something like Walgreens, right? And we're talking like a year and a half ago before Corona. The Walgreens had a bad earnings day and knocked the Dow to its knees in a day, down 700 points, all because of Walgreens. All right, so don't think that one company can't move this market, because it can. So I want to change this to Nasdaq 100, sort it by change in the pre-market. We got a handful of names that are flat, basically not doing anything. More than a quarter of the names are in red, but again, it's less than a quarter of a percent. A lot of these names, so they're down slightly. Not negligible, basically. Now flip over here. This is where we can actually quantify with a number how many names in the Nasdaq 100 are up at least 1%. 5. Now 1% would be a really good bullish morning. How about just an average morning? 0.5%. 12 names. Okay, so 25%. 17 names, 17% of the Nasdaq 100 is up at least 25%. It's not feeling too bullish, right? And just to peek, just to fuel my own curiosity, what's the negative? How many names are down in the pre-market at least 0.25%? 5. Facebook, Google, Intel, and Moderna. It's not that bad. S&P. How many names in the S&P are up at least 0.25%? 28. 28% of the S&P is up at least 25% this morning. Those are good numbers. It's holding the line. But look at how many of these are financial names. Now, financial names immediately make me think that I didn't cover the bonds and I did not cover the dollar. We have that critical line in the sand on the bonds. We keep tickling the bottom of that thing and coming back up. Persistence beats resistance. So, if we're looking for a move to the downside, we call that resistance, not support. And that resistance is weakening. Now, you can stick to your word support, and you can say support is weakening. The more times we tag that level, the more liquidity we are removing from that level. We're chewing through the floor of this thing, and should it drop and we see the bonds make a significant move below 157, it's game on. We're going to see the ramifications of that through the marketplace. When bonds go down, interest rates go up. The banks really like it when interest rates go up. Here's the catch-22. Technology does not like it when interest rates go up because they want to borrow money to buy their own stock. And they don't want to have to pay large lending costs to borrow that money. So they don't want to do it at a high interest rate. And if we get that break below the 157, we're going to be dipping into some serious levels. That's going to be really great for the S&P. It's going to be not so great for the Nasdaq, yeah? Now, the dollar, on the other hand, is a tricky, fickle thing. And the reason why is the dollar isn't always representative of one thing. It can represent a multitude of different things. And we have to try to figure out on a day-to-day basis, what are you representing today, right? This thing has no loyalty at all, right? Like, you know what the S&P represents. You know what the Nasdaq and the Dow, the Russell. They don't change their mind. But the dollar, sometimes it's a fear gauge. Sometimes it's a risk on gauge, right? And the only way the best way to try to identify on a day-to-day basis, is it a fear gauge today? Well, is it mimicking the VIX? If it's not mimicking the VIX, it's not a fear gauge. This is a tool used around the world. They will pile into our dollar when there is doubt, confusion, hesitation, when there is, this belief that something negative is coming. They will go to the dollar. They will use it for a hedge or a haven, a place to hide. That's often what we see in the VIX. So when those two are responding in the same direction, in the same way, and they're behaving and acting the same way, we know the dollar is doing that for the global community. But that's not what we're seeing here. So the dollar is being driven beyond that for other reasons, not for fear, not for a hedge. And usually when it's not that, it's the other thing. Well, what's the other thing? The other thing would be, say, perfect example. China cracks down on rich people over in China, and the rich people say, well, I guess I'm going to get out of this market because these crackdowns are making it hard for me to use my money effectively, and they'll come over and trade our market. Well, to trade our market, they got to get our dollar. So they'll buy up the dollar to get participation into our marketplace. And that would, of course, be a positive thing, not a negative thing. So a strong dollar or a weak dollar kind of misses the whole picture. It's, why is the dollar moving? If it's not mimicking the VIX, the dollar moving has nothing to do with fear, right? Nothing to do with greed. Keep your eye on this. Explosive, strong moves in the dollar can and will rock out our marketplace. Same thing with the bonds. If we see a very hard, very sudden, very sharp move in the bonds, heads up, right? There's something going on. Now, recognize that move yesterday when the dollar lit up and made that amazing move to the upside. And when it ended, it went into the close. The dollar closes at 3 o'clock. Made that run up. It went into the close. And after the dollar closed and after the bonds closed, we had that massive rally. You think it's a coincidence? You think I'm looking at the clock all the time? And 1 o'clock, 2 o'clock, 3 o'clock. There's a song that does that. Watch the clock, guys. Watch the clock. It's not asking for too much. Watch the clock. Don't get caught sideways. So a little more information on that PayPal. Read up on this. It's pretty interesting what's going on back there. Doesn't take a lot of your time to read a couple articles. You'd be surprised how much depth of understanding you get when you get past, the flashy headlines. The sectors this morning: energy again, finance, building materials, industrials, consumer spending, emerging markets. Now, emerging markets is speculative money, right? When we see that thing doing good, we know that there are frisky people willing to speculate. I don't use the word gamble, but right, that's basically what they say was speculating. Things down, the dollar, cloud, IBB, and consumer on the other side. Right now, IGV, we've been using IGV for like big tech, and XLC, of course, it's a big tech, right? That's got Facebook in it, and we know what that's doing this morning. So cloud, tech, IGV, tech, XLC, tech. And you can see, even though those are all holding technology names, tech itself is basically flat. So something in there is doing good. That's what I got for you guys. Have a good morning. Be safe. Be careful. I'll see you all at the Bullish Bears. I'll be live streaming in the futures. And have a good weekend.